Commodities in focus. Manisha is standing by with what is top of mind. Manisha, good morning.
Morning, Prashant. Well, I'm taking a step back and looking at 2024, and the best performance still comes in from the precious metal prices. You have gold and silver up by nearly 29 to 30%. It has been strong buying from the central banks, and even as the dollar index is trading on the higher side, the gold and silver prices have held on the upsides there. And even with the rupee trading at 84.90 at this point in time, well, the Indian markets have seen better returns coming in here. So if the gold prices in the global markets are up by 29%, for the Indians, it's up by nearly 35%. Come to the metal space, and here you have seen the best performance actually come in from zinc with 15.5% there. The demand is good, the investment has been weaker, and you are looking at inventories continuing to decline as well, and that has been supporter. Aluminum and copper also saw something between 7 to 7.5% of gains in this year until now. We also have seen good gains come in for the tin prices. What did not do well this year until now is nickel and lead. Higher inventories, especially coming in from Indonesia, and weaker demand led to real declines, especially for nickel prices, where you saw the volumes continue to decline. For LME was yet another factor there. Take a look at the ferrous metals there, and the picture here continues to be bleak as well. The weak China data, the housing numbers, manufacturing data, factory activity, and even with all those stimulus measures, this is a sector that did not see much improvement. And interesting, because when you look at the Chinese steel prices, they were down 16%, but the US steel prices, the HR steel that is down 38% in this year until now. And that pretty much is a scenario for the iron ore prices also. The Chinese iron ore down 18%, but the iron ore prices in the US markets declined by 33% in this year until now. And there's just so much to watch for as we get into 2025. The first quarter itself, the markets would want to know on what the new US president does in sense of that potential US-China trade wars. Markets will watch out for volatility in sense of shifting policies, tariffs. The currency markets have been quite volatile as well. And then it also is going to be about on what we see in 2025 in sense of EV demand, decarbonization, and then the markets are also looking at supply constraints there. The fluctuating global demand and supply and uncertainties coming in from China would be something to watch for as well. And the investment demand is going to be quite important because that would tell you on how the inventories will shape up. But even before that, and before I can tell you what 2025 can look like, the markets will today hold their breath and watch out on what the US Fed meeting really delivers. While there is a 93% probability of a 25 basis point rate cut, but the most important statement coming in from the US Fed is going to be for outlook in sense of policies for 2025.
Absolutely, and will be closely watched. Manisha, thank you very much for that. Cipla is